Why don't we start off with some of the action in Washington? What do you think this means for crypto broadly and more specifically when it comes to Bitcoin and Ether?
This is basically kind of the starting gun on a huge stampede into this space. So a lot of the world's big institutional investors have been sitting on the sidelines. They've been looking at this marketplace for a long time, both Bitcoin and Ether, and especially stablecoins. They've wanted to get into it, but they've been nervous about the regulatory environment, especially here in the United States, because we've been lagging for the last few years. This basically unlocks that entire ecosystem. So we expect a stampede of banks, institutional investors, enterprises going in. Consumers have already adopted. We've got some like 50 or 60 million Americans with crypto, but we expect to see big engagement here, and I'm going to expect to see a lot of announcements, especially around enterprises buying Ether for their treasuries.
All right. You're saying that people are more open to cryptocurrency, but a lot of the action really seems to be focused on Bitcoin. You're part of an Ether trade alliance. So talk to us about what this could potentially mean for Ether. Now, Ether is generally seen as kind of a crypto you can kind of build apps and things on. Do you see it also becoming a bigger part of retirement accounts, just holdings for retail investors more broadly?
I absolutely do. So the key to Ethereum's success is the fact that it is the main programmable ecosystem on which you can build stablecoins, real-world assets. Something like 85% of all the real-world assets, like things that exist off-chain, are tokenized and delivered on-chain. We saw last month an announcement by Robinhood that they were going to build their own layer 2 network on top of Ethereum. And very importantly, in that network, they're going to be offering investment products that you can't get in any other place. So I think this is going to draw more people in to this crypto ecosystem. And because Ether is the currency that is used as the foundation for this Ethereum economy, it's the power for all these Ethereum transactions. It's what we call gas in the ecosystem. That means that if you want to transact on Ethereum, you're going to have or use some Ether, which I think over the long run is going to drive tremendous demand for Ether and make it probably potentially a much larger asset than Bitcoin.
And right now, Ether's up about 5%. I want to go to stablecoins. A lot of talk about stablecoins. Why should we care so much about stablecoins? Why do we need legislation surrounding them?
So we need legislation because stablecoins aren't really explicitly covered in any of the existing infrastructure, but they're gaining tremendous traction. I mean, even before this legislation took place, last month it's estimated there were about $800 billion in stablecoin transactions worldwide, and that's up 100% from about the same time a year ago. We've got institutional investors piling into this space. They're going to use dollar tokens, which are what stablecoins mostly are today, to buy those kind of tokenized assets and make purchases. And it's also going to transform the entire payments ecosystem, right? In the traditional financial system, we think about payments in terms of days and a cost in terms of dollars. On-chain, we think about transactions costing about a penny and executing in under a second. That's the benchmark we're headed to in Ethereum, and that's really quite radical and different experience.